Good day, everyone. Welcome at a new video for the recent Bitcoin updates and crypto markets. I'd like to discuss a few things in this video. The recent price movements of Bitcoin, my recent article of Cointelegraph, and what I'm expecting on the markets. If you have seen the article today on Bitcoin, it's posted 2 hours ago, I guess. It's still 1 hour. Probably it's going to be in 2 hours and 15 minutes. But we have discussed the recent movements on Bitcoin in this article, in which we can see that Bitcoin is moving alongside a sideways range. However, there is a 4-hour bullish divergence, which is going to be a subject of this video. And there is a big question in whether we can see any revival of the equity markets, or at least a bounce upwards. We're going to discuss that, and we're going to end off with what I'm expecting on the BTC markets. I'm not going to discuss the coronavirus, as you can see that on my Twitter a lot. Just had a press conference of the government stating economic measures to help us around. It's gonna cost billions and billions of money, as we can say from Trump. He usually says trillions, but it's the first packages, and I don't believe we are there yet. It's gonna cost a ton of money, and I do believe that because of these amounts of money, we will end up in the Great Depression XXL, and in the end, we are going to need Bitcoin or something else than the current system. But we are going to in depth on that during the coming months. We have time for that. First of all, the price movements of Bitcoin. We have seen that we crashed bigly during the last week. We've seen the biggest crash since 1987 on the stock markets yesterday. After that, we have established a sideways range in which we can say that the resistance is found at 6,500 and 8,500. The bottom of the range is 4,800 to 4,950, with two outliers in which we tried to break up, couldn't close above, and tried to break below and immediately jump back up. We've discussed this on Twitter, in which I said that if we continue to range here or hang here, we could make a bullish divergence in which we can see upwards momentum for a little, which occurred. As we see on the 4-hour time frame, we can see that there is a bullish divergence, which usually signals some short-term reversal. You can see it on every bottom almost. We see it here, a short-term slow bottom formation in which we grind upwards, and there are more examples found. First of them, you can see that we made one here, in which the last drop down was weaker in volume. Bullish divergence, grind upwards, flipped the level here, and started to rally upwards to the main resistance. What we can see here is a similar example, bullish divergence on this one and here, and then another rally upwards. You can just go all along through every bottom formation, in which every time you will see a bullish divergence. Does that signal that we have found a floor for now? At least for the coming few days, I suspect. There's also a CME gap lying above us, but does that say that we have fully reversed the trend? No, because on the higher time frames it just looks sad, and it looks like we have to at least test the bottom one more time, or make a new low to confirm the bullish divergence on higher time frames. And if we confirm it on higher time frames, we've got strength to reverse the market. If you go back to 2018, there's many daily divergence examples showing that the market reversed. For example, in June 2018, we saw the bullish divergence, after which the markets reversed for a month. The same occurred in April. The same occurred on smaller time frames in February. The same occurred on the bottom in December 2018. And then if we go towards the equity markets in combination with this, there is a feeling that we might drop down even more with the equity markets, and I do agree. We are likely going to fall even faster and more deep than a recent recessions. However, the fear and greed index on the equity markets is at 4, at 1, at 3, whatever. It's on rock bottom levels, while the volatility is extremely high, and the equity markets in the States have dropped 32%. Today they announced a huge message. They even announced helicopter money, so it's coming. And because of the insane drop down, I assume we might actually see some relief before we continue to fall. I refer to this in the way that there's usually this is usually the first panic, which is priced in now. People expect a lockdown. People expect more infected people. People know that there is economic instability, and finally getting some rumors from the government and some measures from the government that will help them short term. So in the short term, people might be feeling more calm, or at least there's a bounce back up from the equity markets because of all the measures and because of the first panic going away from the coronavirus. However, by injecting so much money into the market, there's actually a bigger problem arising because of the debt, because of potential increase in inflation, which could be a huge problem in the next years or maybe even this year. We've seen that occur during the 1930s, the Great Depression, which actually ended up with World War II. So short term we might see a relief because of technicals stating that they are overextended downwards, indicating a short-term reversal. Measures from the governments, the first panic going away from the coronavirus, but nothing is settled from the coronavirus or in the economic way, as everything is still locked down. Many countries will even lock down some more, or my country is opening up schools, but I assume within 3-4 days will be locked down as well, because UK actually just stated that they underestimated the spread of the coronavirus and didn't expect it to increase this fast. So I assume the next shock will still come in a few weeks from now. Even if it is coronavirus, even if it is economically, we will see the next shock. But if we go back to history, and let's just not make this video too long, let's go back to history if I can. Thank you very much. Usually, markets crash very fast. The bear market is fast and painful. We know that from 2017, the Bitcoin markets. If we go back in history and we go back to, you can see how volatile it was back in the day. If we go back to the 1929 Great Depression, you can see that there was a free fall of 50%, with a wick included. After that, there was a period of, can I get it? Thank you. A period of 23 weeks, 150 days of some calm pace before it continued to downfall even further. If we go towards the Nasdaq in 2000, there is another example, which is also just a regular bubble pattern. You can see it, the same formation as you can see, after which the market dropped 40%, and then the market ranged for 14 weeks before it dropped even further down the drain. And if we see the current market, we can see that it's even a bigger version than the one we've seen here. If you use the stocks, you can even see a significant parabolic. These are just levels I've made, in which it probably just popped already, given the significance of this move down. So what we know is that in 1929, the market crashed 40 to 50% and bounced back up for a dead cat bounce or bull trap. In 2000, the same occurred. Market made a 40% first drop down, after which the market made a relief rally of 14 weeks before it continued to drop down. If we go towards our dearest friend Bitcoin, which she's seemingly trying to get above $5,400, and I flip it towards the daily, and it works, that will be absolutely amazing. We see that on Coinbase it is 47%, on Finex it is 41, I guess. Let's see. Oh, 46, okay. The market crashed 46%, after which there was a 15 days, 2 weeks sideways motion before the market started to crash further and eventually bottomed out 1 year later. So usually in these parabolic breakdowns, which I expect to be happening right now through this black swan, is that the market drops down 40 to 50%, 35 to 50% before it continues to fall down. And if you see the technicals, there is reasons to believe that we go down further. So cash is still king if you are an equity trader. But there's also reasons to believe that the market will just make a short-term bounce up. These levels have not been seen before. It's already a 40% crash on the European stock markets. There's measures going to be taken. People will calm down a little bit. People will understand and market priced in the amount of infections. So short term, we should be expecting some sort of relief rather than a continuation of the fall down. How long that relief rally will last, I don't know. It's going to be probably a short one, given that the infections will just increase, and the infections have not really hit any Eastern Europe or third world country yet. I know that there's already African countries getting like 50 infections, so within a few months we will have that as well. However, right now everything should be priced in. It's a risky argument or a risky statement, but I guess we will see some upwards relief rally for at least a few weeks before we continue to fall. And I do believe that the equity markets will crash 80% or so, just as crazy as 1929 was. Alongside with that, this level was a yearly level. There's also a yearly and a monthly level here. Bounce upwards, and you can watch these levels here. If they flip bearish, then we're in bad territory. So that's two of the subjects I wanted to discuss. The bullish divergence, in which we might see a short-term reversal towards 6k. That does not mean, oh, I have to check the daily. You can see that here is still a gap, a small one, which could be closed, makes it like a rising wedge, whatever we have seen here. We've seen the same pattern here occur. After which I suspect the markets to just continue dropping down. Bitcoin, and I think we are going to at least test the lows. So the best scenario I think of right now is that we make a slight rally upwards, probably take the liquidity here at 6.1, maybe even go to 6.4, in which we test the resistance. We test this level here, 6.4, 6.5. In this range, I'd be wondering and looking for shorts, and then we just drop back down to see whether we can find support, and then I'll be watching 4.8, 4.2, 3.7, 3.1. Cash is still king until there's a real bottom formation, and that real bottom formation has to come off larger time frames. So unless you think that everything is over right now based on the 4-hour time frame, I guess it's not. It's just the higher time frames you would want to see bottom out before you assume that anything is over. So that's going to take a long while. And I think Bitcoin and crypto and gold are going to be big winners in the future. Whether it is because of the dollar is having no value at all, or just the adoption of crypto and Bitcoin, probably it's going to be both of them together. However, short term, when the stock markets crash, gold, silver, and Bitcoin and crypto will crash alongside until proven otherwise. So cash is king. If we get 6.1, 6.4, I'd be looking for shorts. If we don't get there and retest 4.8, 4.5, that's going to be weak as well. And then I won't be surprised if we test the lows. So for now, that's my scenario and my view. If you want to read it, you can find it on Cointelegraph. Beneath markets and market analysis, you can find my articles there. I'm gonna be streaming or making a new video tomorrow. If there's movements on the markets, I'm going to If not, then it's going to be Thursday. And I'm going to make videos at least 4 or 5 times a week from now on to just discuss my view. Thank you very much for listening again. Stay safe, think about your family, stay inside, and take care of each other. Thank you very much.